Electric Avenue, and then we'll take it higher. Oh, we gonna rock down to Electric Avenue, and then we'll take it higher. Working so hard like a soldier.
Hey there, thanks for stopping by. Today we're going to be talking about the alternative minimum tax, and this is one of those parts of an income tax return that a lot of people that are clients or become clients, and they come in and they don't really understand how it functions and operates. A lot of these sailor tax, quote unquote, which I don't support that term, a lot of those deductions, you're not going to be able to benefit from them if you're subject to the alternative minimum tax. And the thing is, with the alternative minimum tax, in this day and age, it's pretty easy to be subject to it. What we have here is we just have Joe and Jan taxpayer. What I did was I made it so that they're both shipping out, both sailing, equal salary, no kids. I had them living in Massachusetts. We can use any state. I wanted to use a state that has an income tax for this example. But when we scroll down their tax return, combined they have an income of $240,000, which in Massachusetts isn't a tremendous amount. And they have itemized deductions right now of $45,000. Now, does $45,000 seem like a lot in itemized deductions? Well, initially it might, but if you're pulling 240 grand, the first thing that you're going to have here is state tax payments or state tax withholding, and $12,000 is a fair number for this example. You own a house in Massachusetts, $6,000 for real estate taxes is a very fair number. I didn't even throw in their excise taxes. They definitely would have that in Massachusetts. Mortgage, $25,000 in mortgage interest. That's really not an overstatement once again. Charitable contributions, $2,000. First thing you need to know about your business deductions is they have to exceed 2% of your adjusted gross income. Right here, that's $240,000. 2% of that is $4,800. So number one, we have to be above $4,800 before this starts to count. If we had $4,800 here, we don't get a deduction. No deduction carries over. And this is always a question, well, what if I have $1 more? $1 more, you get a $1 deduction. It doesn't mean everything kicks in. I would say someone in one of the unions paying vacation dues, I think it'd be fair if probably $3,000. That's dues plus fees. When you're cashing in your vacation check, they're going to be pulling the 6% if I recall. Right now, we have that $45,000 itemized deduction. Okay. Right now, our bottom line tax is $41,028. What alternative minimum tax is supposed to do is essentially soak up certain deductions, prevent people in certain tax brackets at certain income levels from benefiting from specific deductions. In our case, the one that really affects the mariner is their work deductions. When we're paying state taxes, real estate taxes, and then our non-employee business, our employee business expenses, they all get thrown into the same bucket, and the alt-min is essentially going to offset a lot of the benefits. So let's look at this in practice here. What you have, if I go and throw in my continuing ed, and we'll just say, it doesn't matter if we use the same number, $1,500. Notice what happened here. My itemized deduction went up by $510. My tentative tax went down. My alternative minimum tax went up. But if we were looking before at our balance due, it was $1,028. So now, what if I throw in, $4,000 in these magical deductions? Well, let's look at what just happened there. Tentative tax went down, alternative minimum tax went up. Bottom line, you're paying the same amount of money. And that's what a lot of people don't recognize. And it's not just, what if this was a $50,000 business expense? You see here, the tentative tax goes down, alternative minimum tax goes right up, takes it. And the bottom line is, you're paying the same amount. So what can we do about this? A lot of clients come in and they'll say, a friend told me that if I get rental properties, I'll be able to take losses on my income tax return, which offsets the AMT. Yes and no. If we look at this one I put up here, this is just a quick rental property. You'll see that we have 20 grand in rent on a house. It's pretty fair. I put some money in for traveling to go over there, some cleaning, insurance, lawyers, mortgage interest, repairs, property taxes, utilities. Pretty straightforward. So we have a ton of itemized deductions here. And then there's depreciation. The actual we get a deduction every year for the part of the value of the property, part of the purchase price of the property, not the land. So we end up having $45,000 in expenses versus our $20,000 in income. So we show a $25,000 loss. The problem is that you're not allowed to deduct any of it. Because of where the income is, the income level, the loss gets disallowed, the entire loss, $25,000. Someone at this income level, 401k makes a lot of sense. So we were at $120,000. If we put 12 into a 401k, 110, we'd be at 108 grand. Right, and we'd be at 108 grand there. And if both people did this, you'll see here that they're still not going to be able to get this rental loss. So let's say we had 10,000 in non-employee business expenses. Employee business expenses is my biggest catch. If we have 10,000 in employee business expenses, you'll see here that Altman is just kicking in, but we were able to lower our tax due and increase our refund. So we were able to get a bit of a benefit out of it. At $8,000, so at $8,000 we start to have Altman kick in on us. Let's say we were going to have certain medical expenses this year. We knew that they were going to rack up to $5 grand. We have co-pays and deductibles that we're going to have to overcome. So it would really make sense if you have one to start loading into an FSA medical. What's that going to do? We're getting a chunk more of our itemized deductions. The Altman's still kicking in. You'll notice there that we were at $6,700. Now we're up to $8,400 in our refund. Reason being because we're one, lowering our taxable income, but two, we're getting more and more income out of Altman territory. I'm just going to point out though, you're still right here, nothing. You're not getting that rental property isn't helping. You might be considering becoming an S corp or an LLC and working for a company that way. I don't think so. They're going to want you on a W-2. By definition, by default, you're an employee. So they're usually not going to want to try to play with that. It's the employer themselves can get into some serious trouble over that because they're required to verify that you're an employee, not employee. Thanks for coming by. I hope this was helpful. Feel free to send any comments or questions in. That's what we're here for. And I look forward to seeing you next time. Thanks.
Take it higher. Working so hard like a soldier. Can't afford a thing on TV. Deep in my heart I abhor ya. Can't get food for the kid.